$35,000?
Yeah.
Under $7,000 a year.
Oh my God, why?
Yeah, because of stuff like this. It's a single family home.
See, and so this is the differences, and apparently they're being definitely looked at because people can't deal with the variations there or the gaps. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Spotify. Bloomberg World Headquarters. I'm Charlie Telepadow. The S&P, they're both higher. NASDAQ on the minus side. Stocks are drifting as solid data renews Fed speculation. S&P fluctuating after the best two-day rally since 2020, up now by 2 points, up less than 0.1%. NASDAQ on the minus side, down 14, drop there of 0.1%. The Dow up 64 points, up by 0.2%. 10 years down 6/32, 10-year yield 1.80%. Spot gold up 0.2%, $1,800 the ounce. West Texas Intermediate crude up 0.3, 87.92 a barrel on WTI. Natural gas now down 1%, 483 per million BTUs. Earnings news: ExxonMobil up 6.3%. Also after earnings, UPS surging now by 13.5%. Lots of earnings after the bell. Alphabet up now by 0.7%. Match down 2%. AMD down 0.2%. Starbucks down 0.3%. MicroStrategy also reporting after the bell, up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, Tim, among our most read stories on the Bloomberg is one on the connection between the Fed's rate moves and the cost of rent.
Yeah, it's the story by Matt Boesler, Federal Reserve reporter for Bloomberg News. He joins us on the phone from New York City. Joel Weber is editor at Bloomberg Business Week. He joins us on the access line from Brooklyn. Joel, if we were doing this story, well, we wouldn't be doing this story a year ago. If we were talking about renting, especially in a place like New York City and other cities around the country a year ago, a lot of the conversation was about good deals that people were getting. What a difference a year makes.
Yeah, and there were some outliers then. But what Matt writes and what we're going to see nationally in the U.S., according to his reporting, is that kind of that rental moment that that everybody maybe lusted after, where you get to, get a cut on your lease, maybe get a little bit more wiggle room. Landlords are landlords, and rental inflation is going to favor them. So Matt, it's not, rental inflation isn't the only factor in this, but how much of a real one nationally is it?
Yeah, so rental inflation is certainly the largest component of the consumer price index, right? Which makes sense if you think about, the typical household's budget. Rent or, a mortgage payment, for example, takes up a lot of that. And so it's been relatively low. It's started to increase now over the last year. And economists are expecting it to go up quite a bit this year, which, is going to be kind of happening at the same time that a lot of these other more pandemic-related supply-side inflation issues that we've been talking so much about, like what's going on in the used car market and with durable goods and so on, as those prices are expected to moderate, rental inflation is essentially expected to pick up the baton and, basically keep overall inflation relatively elevated versus what we saw prior to the pandemic as we move through the year.
Well, and as you point out, Matt, the reason we really care about this is, as you say in your story, rent of shelter, the biggest expense for the typical U.S. household. So you do wonder, that's got to be on the Fed's radar as well when you think about, most Americans, this is a big part of what they spend their monthly income on. And so you do wonder how this might potentially factor in to what they do in terms of policy.
Absolutely, and that's where things get really interesting because, if you look at the consumer price index, not only is rental inflation the biggest component of it, but it also tends to be the most cyclical, right? So it's the one that tends to fall the most in kind of downturns and then long expansions, whereas a lot of the other components that make up the consumer price index are not necessarily very correlated to the economic cycle. So when you think about what the Fed does and what it is trying to do, it's trying to attenuate the swings in the business cycle using interest rates to either boost inflation or bring it down. But, the trick with rental inflation is that it's not obvious that the relationship between interest rates and the inflation rate for that component has the right sign that the Fed has in mind. And so, the Fed is trying to raise interest rates to cool off inflation, but there are all these factors regarding rental inflation that one could think of that would actually make it the reverse. And so, for example, our BI economist, Carl Riccadonna, which we quote in the story, points out that you could see a situation where raising interest rates would make it harder for home buyers to afford mortgages and thus keep them in rental housing and boost demand for rental housing relative to what it otherwise would have been without the interest rate increases. And so that's one way in which, the relationship could be backward from what the Fed is trying to achieve.
Matt, I gotta ask, there's, I mentioned it at the top, there's some cities that had, really high rental inflation last year. Now it's going to be this national trend. But where's the pain the worst?
So in terms of the largest cities that are seeing the highest rental inflation, it's places like Phoenix, Tampa, Atlanta, Detroit, Denver, a lot of, Mountain West and Sun Belt cities. And that's another big part of the story, too, is that, basically what we saw in the early days of the pandemic and really continuing is this, mass migration from these more expensive cities like New York and San Francisco to some of these other places across the Mountain West and the Sun Belt. And so, you're seeing inflation rates go up a lot more there because they're experiencing this big influx of demand. But part of the silver lining with that is that a lot of these places, like Dallas, for example, you're seeing a lot of building happening right now in response to that increase in demand. And it's easier to do that building in places like Dallas where zoning regulations and permits and so on and so forth make it easier for supply to respond to demand than in places like New York and San Francisco, where there's much more restrictive zoning and, it's more difficult for the market to kind of equilibrate supply and demand that way. And so that is a silver lining that hopefully means, once this building is completed and all of these new units come online in some of these cities that have seen a big influx of residents, that inflation will come back down to kind of where it was before the pandemic began.
Hey guys, we have to run. There's also some interesting stats about what's happening with evictions, which I highly recommend people check out the story. Go to Bloomberg.com/businessweek, or check it out on the Bloomberg. Our thanks to Matt Boesler. He wrote the story. He's Federal Reserve reporter at Bloomberg News, along with Joel Weber, editor of Bloomberg Business Week.
Well, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now, with your installment for February 1st, here's Bloomberg's Renita Young.
On this day in Black history in 1865, Boston lawyer John Rock becomes the first African American to be admitted to the bar of the U.S. Supreme Court. Now, traditionally, the Chief Justice would determine who could bring cases to the nation's highest court, and Chief Justice at the time, Roger B. Taney, was opposed to Black people having citizenship rights. But when Taney died in 1864, Rock saw an opportunity. New Chief Justice Salmon Chase was an opponent of slavery, and with the assistance of Massachusetts Senator Charles Sumner, Rock was admitted to the bar of the Supreme Court, although he died before having the chance to argue before the Supreme Court. John Rock would also be one of the first African Americans to speak before the U.S. House of Representatives, and he had several careers as a teacher, dentist, and abolitionist who was passionate about the dignity and rights of all Americans. That's today in Black history. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for that.
And just a quick check on the markets right now. We've got stocks really bouncing around today. S&P 500 just up about 2.5 points here. Call it unchanged. Dow, same thing, but still up about 72 points. NASDAQ going in the other direction. It is down 14. We're going to head over to our TV team in just a moment, and we're going to check in on the markets. This is Bloomberg.
Run to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes to go until the end of the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Masser and Tim Stanovic as we welcome cross-platform TV, radio, YouTube to, well, breathe a bit of calmness to this market. Currently basically unched across the main benchmarks and indeed in bonds.
What are they doing? Maybe they're waiting for a slew of earnings, which we know we'll get after the closing bell. I got to say, UPS, though, a standout for me, and I'm guessing Romain might talk about it in a bit, but it's up about 13%. I think it's a great indicator of what's going on in the economy and what's moving around a lot, apparently, according to UBS, and their ability to raise prices, Tim.
Yeah, we're not seeing that play out, though, at the index level with the S&P 500, as you mentioned, Caroline, flat. It's kind of this tug of war between buyers and sellers today. In fact, by my count, it's moved from positive to negative and back more than a dozen times today, and within a really narrow range.
Did you count that yourself?
I did. I went tick by tick.
Okay.
I did.
It's a Tigger's market.
Value
like
add.
Winnie
Who
the
knew that we worked at one of the biggest fintechs in the world and you're counting them yourselves? Meanwhile, S&P 500
You guys got to show me how to do that. I don't know all the
with
tips
a
and
pencil
tricks.
and one, two,
Romain, you can ask Romain. I go to him for all the tips. So
all the
you gotta
tech
save that one
functions
for me.
remains on them with a functionality or two. Up 6 points on the S&P 500, 4,522 is where we trade. We're up 100 points on the Dow, up 0.3%. We're just clicking into the green as we speak on the Nasdaq, up just 4 points in terms of big tech. Remember, we had been off by 0.7% on the S&P 500 earlier today, so we have had some movement amid the ongoing data that we continue to digest. Russell 2000 finally catching a bit, up 0.5% for the small caps too.
And what's so interesting is financials are now joining energy as being positive again for the year. This is after we're getting another sort of big lift, at least on the day here. This is the sector winners, the sector losers. It looks mostly 50-50, but Romain, it actually looks more risk on in this picture than it really does if you're just looking at the major average. It's energy, materials, industrials, financials. When you think about that yield curve, that's really what is leading it up today. You have to note technology, second worst performer on the day.
All right, well, you talk about some of the big movers. Actually, keep an eye on ExxonMobil. They reported earnings having their best quarter that we've seen going back to 2014. They're going to accelerate a $10 billion share buyback, and they talked a lot about actually increasing production now in the Permian Basin. Keep an eye on that story because now that the big oil majors are starting to get attracted to increasing production, that could have some reverberations here on prices. AT&T finally giving us a little bit of clarity here about that spinoff of that Warner Media deal. Warner Media going to be folded into Discovery. Unfortunately, that means for AT&T shareholders, not only are you getting a slightly different company, one that's focused primarily on 5G and on fiber optics, but you're also getting one that's going to have a much lower dividend. Those shares down about 4% here on the day. Microsoft shares down about 1%. Some concern here right now about the review, the U.S. Government's review of that Activision deal here. The general idea right now is that that's going to be done by the Federal Trade Commission and not the Department of Justice. We know the FTC here in the U.S. under Lena Khan has proven to be a little bit more hawkish, so keep an eye on that space. And here's a fun one for you. Amusement parks, Tim.
Woo-hoo.
Cedar Fair, apparently, according to sources, might actually be bought out by who?
SeaWorld.
SeaWorld. There you go. I was wondering if you were paying attention. Actually, I forgot who it was. I need to look
Phone a friend. We're all here. That's what teamwork makes the dream work. I'm looking at what's happening in terms of the calls coming in from analysts as well. Remember that rush into the end of close of December when suddenly everyone started upping their S&P targets for 2022? Well, we've got our first person to pull it back again. A month into 2022, Ed Yardeni's doing it. He comes in with, of course, a call for 4,800 rather than 5,200. The reason? It's the Fed. And Carol, we've had plenty of Fed chat today amid some of those earnings as well.
Yeah, absolutely. We'll talk about that. We've also got a lot of CEO chat as well. And our Manus Cranney caught up with the CEO of UBS, Ralph Hammers, and he talked about kind of his list of concerns. It's not only inflation and supply chains, it's actually something else. Check it out.
Everybody's making their own analysis if it comes to inflation there. But you can work with that. Geopolitical tension and the potential events coming from it, that's more difficult.
And that is Ralph Hammers, the CEO of UBS. It's just a reminder, like we talk so much about the inflation concerns, understandably so, about supply chain concerns, also understandably so, but he's watching and he's over there in Europe, you know, watching what's going on geopolitically right now between the tensions between Europe, the US, and Russia.
Yeah, and certainly much more unpredictable, obviously. Look, we get the economic data on a slow and steady drumbeat of economic news, and of course, the jobs report coming on Friday. But when it comes to geopolitical tensions, that's what can shock markets and catch people by surprise, and it's unclear what's going to happen between Russia and in Ukraine.
It's unclear, though. I mean, and we should point out, we've had a few people on the program here on the television side that have kind of said that, overall, geopolitical events like this tend to have short-term effects on the markets, but they really don't necessarily last unless it ends up being, something really major with regards to some type of warfare. But if it's, just basically something that's contained to that region here, it could have some effect on commodity prices and whatnot, but the broader term market ramifications may not be as bad as some people thought.
And the market is befolding the interlay between the strategists on the street, Caroline, and to your point, the Federal Reserve really comes from, as you mentioned at the top of the segment, Ed Yardeni saying the Fed has to get on with it. They are late. Why are we waiting this long? The labor market is strong. We certainly saw that in the JOLTS data this morning. Inflation is a problem. Why aren't we doing what just needs to be done? I think that is the question.
And when I haven't been tweeting about NFL to NFTs or Tom Brady, I have been retweeting one Carol Massa, because you've been talking a lot about noticing what some of the Fed speakers, Ben Bullard now coming out saying, look, this raising by 50 basis points, shock horror, that's not going to be helping the Fed overall. So he's not in on the 2 rate hikes as soon as March kind of a vibe.
Well, and you have Pat Harker, who talked with our own Mike McKee over at the Philadelphia Fed. It does feel like all of a sudden, after a lot of aggressive Fed talk post the meeting, that we are now getting them kind of reining it back, kind of pulling us in again and saying, well, maybe we won't be as aggressive, everyone.
Well, you know who has been aggressive is the White House in saying that we should lower our expectations for the jobs report. We talked about Marty Walsh yesterday on our air. We heard from Brian Deese earlier today on one of the cable networks saying, hey, remember, this is Omicron in the early part of January, and it could show unemployment being higher because people were out of the workforce.
Yeah, and I mean, it really just underscores the idea that the data has been relatively uneven, really now, since the pandemic. And even when you get a bright spot, you're going to have a little bit of a pullback here. The question, I guess, Carol, is how much resolve do policymakers have to sort of move forward with what they've already told us?
Yeah, but they have to be nimble, too, so this could change. They can tell us one thing and then change. It's kind of like dating.
Flexibility.
You like, you don't like.
Unreliable boyfriends.
Here we go.
See? Match reports, by the way, after the close, so it all comes together. All right, that's going to do it for now. We're going to catch up again with you. Match is up, by the way, here ahead of those earnings.
She certainly isn't.
All right, folks. Oh, my goodness. We'll see you again at 4 p.m. for Beyond the Bell. Radio, TV, and YouTube. We're going to take you down to the close.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Radio, Bloomberg Business Week, and we do have a slew of earnings after the close. Let's remind everybody. I was looking at some of maybe this, I don't know if we should say smaller, but PayPal, Match, and I think MicroStrategy. Actually, Match may not be up. This may not be the right ticker.
Well, Match is after the closing bell. Hey, while you're looking for that, I'm going to go through some of the other names here, and I'll do this in chronological order by typically how they report.
It's down, actually. It's down about 2%.
Okay, Match down about 2%. General Motors reporting after the bell. We're also, of course, going to hear from Alphabet. That's the one that I think we're going to spend the most of our time on, Carol. It's certainly the biggest. Electronic Arts. We have MicroStrategy. It's a Bitcoin company at this point. Hey, did you know, by the way, they bought about 660 Bitcoin for about $25 million as the price of Bitcoin fell between December 30th and January 31st?
Buying on the dip, apparently. But you want to know something? Percentage of float that is shorted right now is about 24%.
So that's a bet against Bitcoin.
Yeah, absolutely.
For sure.
Absolutely, because that's what that company is all about.
You look at the chart of Bitcoin and MicroStrategy, they move in tandem.
Yeah, exactly. So nonetheless, that stock's down about 32% this year. So we'll see whether or not. But you're right. Alphabet is a big one. What they're doing in terms of streaming. I think there's also this bigger play. We're going to hear from Electronic Arts. What's going on in the video game industry. And there are names like Disney and Google and some others who are definitely looking at the gaming industry, looking to spread out. We saw Microsoft do its big deal. So that's also the kind of one of the big macro themes and stories going on at the same time.
Yeah, I expect a lot of questions to EA executives about that after the close and after on the earnings call today because we had that $3 billion acquisition announced yesterday.
Sony and Bungie. Yeah, exactly, right. And they did their own acquisition. I'm trying to think who they did. Glue
Mobile. Yeah, and don't forget about New York Times buying Wordle.
Yeah, there is that too.
It's
a little different.
It's very different.
All right, let's get back to World and National News. Nancy Lyons, take it away, Nance.
Thanks, Carol. President Biden has been receiving input on the Supreme Court process from Senate Judiciary Chairman Dick Durbin and Ranking Member Chuck Grassley. Biden says he is pushing to name a nominee soon.
Well, I intend to take this decision make this decision and get it to my colleagues by the end of the month. That's my hope. And I'm looking forward to their advice and how to proceed and how the hearings will be conducted and the like.
Biden has promised to nominate the first black woman to the High Court. Liberal Justice Stephen Breyer plans to retire when the High Court's current term ends this summer. President Biden's Build Back Better bill is a thing of the past, according to Democratic Senator Joe Manchin, who spoke with reporters today.
What Build Back Better bill? There is no, I don't know what you're all talking about. You haven't had any talks about that? No. It's dead.
Manchin says they need to start with a clean slate. Well, we may be seeing signs of improvement in the Omicron wave.
Hospital admissions for COVID-19 are falling in 34 states and Washington, D.C. It's a sign the strain on the healthcare system from Omicron is starting to ease. Data from the U.S. Department of Health and Human Services show the biggest declines are in New Jersey and Maryland. New York, D.C., and Connecticut are also seeing steep drops. Hospitalizations are still rising the most in Oregon, Wyoming, and Alaska, but emergency admissions in those states do seem to have peaked. In Washington, I'm Nathan Hager, Bloomberg Radio.
The government says U.S. traffic deaths surged in the first 9 months of 2021 to nearly 32,000. That's a 12% increase over the same period in 2020. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. So, great story we want to mention, getting a read spike on the Bloomberg, comes from our own Vinny Del Giudice, who is out in Denver, in Colorado, of course. And he said, well, ultimately, here's the headline. The NFL's Denver Broncos, they're up for sale.
I thought you were going to talk about a different football story today.
Oh, you mean Tom Brady?
Yeah, no, I'm just kidding.
I know.
This one's actually a
I'm so
newer
proud
story.
that you're talking football.
Yeah, well, sometimes it's a business story too, Carol.
It is
a business story because Tom Brady, he's going all in on crypto and NFTs, right? And he's launched some brands.
Guess so.
But let's talk about the Broncos because Vinny writes that a statement by the team, Joe Ellis, the team's president, says, quote, the Pat Bowlen Trust announced today the beginning of a sale process for the Denver Broncos. We have retained Steve Greenberg of Allen & Company as our financial advisor, as well as some other folks for legal advisors for this transition of ownership. He says that selling an NFL team is a complex process involving numerous parties and league approval procedures.
Yeah, there's a lot of steps to go through before there is a sale. The league pretty particular about, I think, who owns what in terms of teams. And so what'll be interesting to watch is who ultimately jumps in and what the price will ultimately be in this marketplace. There's a lot of money that's been out there. It's the first NFL team to go up for sale since 2017.
Yeah, I mean, the price is going to be obviously a big part of this. We've seen, asset inflation in a huge way. And we're not just talking, we talked last week about yachts, and we're talking about homes during the break, Carol. And we talked about homes earlier, but sports franchises as well. Prices have just shot up in value in recent years.
I'm looking at some stories that are all kind of weighing in on this, and they could pay upwards of $4 billion for the franchise, what they're talking about. So, there's not a lot of teams. So when one comes up, and as we said, there hasn't been a team in a few years, so it's interesting to see, again, who comes in and what the price will be, certainly in this environment. We'll say a lot about that. And it could be, I'm just looking at one report saying that a potential sale of $4 billion or more would be the richest team sale in the U.S., and it looks like in some time. So we'll keep an eye on it. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P at or near session highs. NASDAQ on the plus side as well. It is an up day on Wall Street. 43 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, U.S. stocks trading higher in a choppy session today. Dow's currently up 156 points. S&P's gained 14, while the NASDAQ is higher by 27. The U.S. 10-year yield at 1.8%. Gold and oil are both little changed. And among the main 11 S&P sectors, leaders were energy and the materials. Utilities were under pressure. Leaders to the upside in the Dow, Boeing and Dow Inc., while UNH and Microsoft led to the downside. And in deal news, SeaWorld has offered to buy amusement park owner Cedar Fair for around $3.4 billion. In other news, Ford is considering up to $20 billion in additional investment in electric vehicles. After earnings, UPS gained as much as 16% to a record. And wrapping things up, it's a busy night for earnings with AMD, Google, EA, GM, PayPal, and Starbucks all reporting after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type Squawk SQ UAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. You're listening to Bloomberg Business Week on this Tuesday. So just yesterday, Bloomberg put out a story. It noted that last year was a pretty rough one for the cannabis industry, with high hopes initially pinned on the incoming Biden administration in terms of a regulatory change or welcoming, and ended really with gridlock and an extended decline in the stock prices. So key things to watch out this year, Tim, according to our BI intelligence team, is progress on the reform front in really in order for the industry's fortunes to shift.
Well, let's get into it with Kim Rivers. She's CEO of TrueLeaf. She joins us on the phone from Florida once again. We love talking cannabis with you, Kim. You run a publicly traded cannabis company. You have over 160 stores around the U.S., market value north of, just around $4 billion right now. I want to just get your thoughts on what Carol mentioned about 2021 and 2022. What gives you, what's the landscape look like in 2022? Because I know there was a lot of optimism around regulatory reform, but look, the Biden administration certainly seems to have its hands full with other things ahead of the midterm elections.
Yeah, no, I think that, so first of all, thanks for having me back. What I would say is that there are lots of reasons for continued optimism across the cannabis landscape. Certainly, as we've talked about previously, there was a lot of high hopes for federal change much earlier with Democratic control of Congress. However, we do have a continued champion in Congressman Perlmutter, and it was recently announced that he was successful in getting safe banking attached to the Competes Act. And so we're not giving up hope yet with respect to safe banking, which we think makes a ton of sense and has been championed not only by the cannabis industry but also by banking folks on the Hill as well. And again, seems to continue to garner significant support and would certainly make a lot of sense for this Congress to go ahead and pass prior to midterms. That being said, though, as we've also talked about before, business still remains strong. We actually TrueLeaf just closed a second round of debt, $75 million last week, bringing our most recent raise total to $425 million. It was oversubscribed and at industry-leading rates. We're seeing debt rates continue to come down for the industry, and so what we see in the stock market is a continued separation between fundamentals and where the market is, and we think that that's going to close here over the next little while. And again, fundamentals are strong, and folks are continuing to show strong demand across the U.S.
All right. So can we be as bold or so bold to say, in terms of regulatory, which you guys have all been waiting for some kind of cohesion on a federal level, are we likely to get it, Kim, this year? And if we don't get it, and if we don't get it this year, is it tricky because then we're dealing with a whole other election cycle or counting down to another big election cycle?
Yeah, what's interesting about that, and so I can't give a prediction. I do think that incremental change is the more likely path, and I do think that safe banking is a very logical and rational first step. So that's why you hear me, continue to talk about safe banking. I'm very, hopeful that it could be safe banking plus, meaning safe banking plus some sort of criminal justice and or other social equity reforms to go along with it. I do think that obviously if it doesn't happen by the midterms, we may see a shift, and obviously there's always a reset after that. However, what I can say is that with Congresswoman Mace's comprehensive reform bill dealing with cannabis, and as you know, she's a Republican out of South Carolina, this is becoming over time less and less partisan as, of course, we see more and more states come on board. We have a number of southern states that are actually implementing medical programs here over the next 6 to 24 months. And so it becomes, less and less a partisan issue. I think it becomes more and more likely that kind of regardless of which party is in control on the Hill, it sort of becomes, again, not only an if, but just a when.
Well, I want to talk more about that, and I think I've shared this story before, Carol, but when I was in graduate school, 2016, 2017, a friend of mine wanted to start a cannabis entrepreneurship club, and this was business school, and he couldn't do it. He was facing pushback from the administration. He had to go around and get signatures. And I'm wondering, Kim, how much has changed in just a few short years? If we're thinking that's just 5 years ago, 6 years ago, how has the public perception around cannabis changed?
Oh, it's changing daily. I was just forwarded an article this morning that the NFL has just announced $1 million donation for research with respect to cannabis for alternative therapy treatments having to do primarily with concussions in the NFL. So, I mean, think back to, again, that same time period you just mentioned where literally players, significant players were being banned from the NFL because of failed drug tests involving cannabis. So certainly perceptions are changing, research needs to follow, and the politics will follow thereafter. But like I said, I mean, I think we would all have laughed at that time to think about states like, again, Georgia, Alabama, Mississippi, Louisiana, the Carolinas, even considering or having a meaningful policy debate on those legislative floors around the notion of having any form of legalized cannabis. And so, times are changing, and again, Congress just needs to keep up.
Yeah, and we'll see. It's certainly been a tricky political environment once again. Hey, Kim, nice to check in with you. Kim Rivers, she's the Chief Executive Officer of True Leave, joining us on the phone from Florida. And certainly it has been always one of the big issues, right, in terms of the regulatory, and really having some clear set of rules on a federal level, certainly when it comes to banking and other things.
Yeah, that banking one's so important. I mean, for years, so many of these companies have had, locally have had to operate in cash. Because banks just won't touch the money.
Right, and they're trying to keep moving forward, but they really want some rules on a higher level. All right, you are listening to Bloomberg Business Week Chart of the Day, coming up in just a moment, right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we're talking a favorite subject of yours, regression line.
Yeah, love it. I go all the way back to stats class to remember regressions.
We are going to talk about it. It's a really fascinating chart by Kriti Gupta. We'll get to her in just a moment, but it has to do with some of the big tech names, which is really relevant considering Alphabet/Google report.
Look, just a different way of looking at Alphabet's revenue growth. It's a really, really good chart. We're going to talk about that with Kriti Gupta in just a minute. In the meantime, a check of that trading day, less than a half hour until the close. Hey there, Charlie Feller.
Well, hello there, Tim Stenovic. 28 minutes to be precise with the Dow, the S&P, and that. Look at the Dow right now. Best level of the day, up 231 points. Big jump there from our last update, up by 0.7%. S&P, as I check the GIP chart on the Bloomberg session high right now, up 25, up 0.6. We've got NASDAQ on the plus side as well. High of the session there, up 71 points right there, up by 0.5%. First trading day of the new month, different tone. Stocks adding to the best three-day rally since 2020. Investors bidding up the companies that benefit the most from a strong economy. Gold up 0.1%, $17.99 the ounce, flirting with that 1,800 level, was trading above it a few minutes ago. 10-year yield 1.80%. As for Bitcoin today, up 0.5%, 38,641. And we have got West Texas Intermediate crude up 0.1%, 88.22 a barrel. Ton of earnings after the closing bell today, including Alphabet, parent of Google, Match, AMD, Starbucks, and MicroStrategy. U.S. hospital admissions for COVID-19 are receding in 34 states and the nation's capital, easing the healthcare staffing crises that were widespread at the start of the year. China, meanwhile, gearing up for the Winter Olympics, which kick off Friday. Beijing is battling a growing cluster of coronavirus infections. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and he told us this morning he is skeptical of China's COVID-0 policy.
My advice would be to expect that you're going to get cases, to use the tools we have, rapid tests, making sure people are vaccinated, having antivirals on hand, and then also to push back on Chinese policies that kind of are premised around this idea of COVID-0, and to really at all points not accept any kind of authoritarian measures that may be put into place in that setting.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares up now by 0.6. Its German partner BioNTech up 3.7%. Those are the ADRs. AstraZeneca's ADRs down 1%. Moderna up 1.4%. J&J Johnson & Johnson down 0.9%. Briefly after earnings, UPS delivering a 14.6% gain, and electric car sales hit a new monthly record in Norway, indicating the Nordic country is on track to reach its 2025 goal of no new fossil fuel cars being sold. I'm Charlie Cullen.
That is so
incredible,
cool.
right? That's a Bloomberg Business Flash.
Really cool.
Very cool stuff. Of course, GM earnings after the bell as well, speaking of autos.
Well, and Ford doing that big reorg and speeding up a shift to electric vehicles. So, man, the race is on. I love it.
You love it. You do
I
love
do.
it.
When
that Ford news crossed, you were like, this is so cool.
Well, thank you, Elon Musk. Like, really kind of waking up the world.
Oh, totally. Hey, you know who else is waking up the world is Kriti Gupta. She's markets correspondent at Bloomberg. She joins us on the phone from New York City. Sign up for Kriti's chart of the day. You can do that at kgupta129@bloomberg.net. Just send her an email. Also, check out her Twitter and Instagram at Kriti Gupta News. Kriti, we're talking big tech because along with General Motors and GM, I should say, after the bell, we have Alphabet, the parent company of Google. You have a chart of the day that shows revenue growth. Why choose logarithmic here?
Yeah, well, I wanted to show just how much Google, or Alphabet, I should say, has really grown in the last 10 years. Because I think a lot of people think, well, yeah, well, big tech is, everyone's growing. Obviously, they're like the big players in the universe. But to see that consistent growth over 10 years, well, that's not an easy feat. And if you actually look at their market cap, we're looking at about $1.8 trillion. They are the third largest company in the S&P 500 after Apple and Microsoft. And they were still able to post 41% year-over-year growth, according to the latest quarterly data. That, of course, does not include the earnings you're going to get after the bell today. So to see a 41% increase on a nearly $2 trillion market cap is pretty huge. And just for some context here, Apple gives 11% year-over-year growth. Microsoft does not meet that 41%. I think it's like 20% for Microsoft. So this really kind of highlights that Alphabet here has been growing at a pace that's kind of unprecedented, even for a big tech company.
You're saying more than twice the growth rates of Apple and Amazon.com. And what's interesting is then you take a look at the market cap that both Apple and Amazon have achieved in comparison to Google. As an investor, right, you need to think about, well, wait a minute. Alphabet has really been outperforming, especially when it comes to revenue growth.
Yeah, and what's really interesting about big tech is I think we like to kind of bundle it all into these really huge companies that have a ton of cash and that have something to do with tech. But even within this kind of big tech bubble, you do have variation of what these different kind of companies do. So, for example, Apple, Microsoft, they have more to do with kind of hard sales, iPhones, smartphones, laptops, PCs, etc. Whereas for Alphabet, for Meta Platforms, and arguably for Amazon too, they are way more exposed to the economic cycle. So in 2020, which I think is our kind of best poster child for these big tech gains, we actually saw a divergence between Apple and Microsoft and then Alphabet, Meta Platforms, and Amazon. And a lot of that has to do with the idea that Alphabet and Meta Platforms are far more exposed once again to the business spend, but a lot of eyes on the earnings tonight after the bell are going to be on their cloud spend in particular.
Rightfully so. Can we talk UPS? I am just obsessed with this company also. Up 14.5%. They've been going through kind of a reset under the new CEO, but man, they definitely have pricing power.
Oh, they have pricing power. They came out, they beat their earnings, they gave a really good forecast, and this comes at a time when there are a lot of supply chain issues, a lot of delays. But I think really the icing on the cake here, or the cherry on top of a pretty great sundae, is how they're tackling labor. And they were actually way ahead of the game when it came to hiring workers for the holiday season and doing it at higher wages. And that's really what helped them get through the holiday season. And it was the higher prices that actually helped offset the labor costs. So they're a really good kind of roadmap to how corporate America should be tackling these issues.
Yeah, this is a really interesting story today because not only do they have the pricing power, but shareholders reacting in a way, sending shares to close to record highs, Brady.
Yeah, a record high. Remember, UPS is also an economic bellwether. So not only was it the major index contributor today, but also kind of is a good sign on the underlying economy. It means that if UPS is thriving, then the underlying economy is seeing a pretty good amount of activity.
It's why I love to watch it, right? Absolutely. Like we get obsessed with all the high tech and big tech companies, and rightfully so. But this is something that just shows what kind of stuff is moving around in our world. Stock now, because of today's quite big jump to the upside, stock is now almost up about 8% so far in 2022. Kriti, thank you so much. Kriti Gupta, markets correspondent at Bloomberg News, on the phone in New York City.
Check out her chart of the day, K Gupta 129 at Bloomberg.net. Also check her out on Twitter and Instagram at Kriti Gupta News.
All right, let's get to world and national news. Back over to Nancy Lyons in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. President Biden is setting the table for the upcoming Supreme Court confirmation process by meeting with the top two members of the Senate Judiciary Committee.
I want the advice of the Senate as well as the consent. We can arrive on who the nominee should be.
Biden has promised to nominate the first black woman to the high court and vows to have a nomination by the end of this month. Well, it's official. After the frenzy of rumors and speculation, Tom Brady has announced his retirement. Bloomberg's Janet Wu with more.
He dropped the announcement on Instagram. I have loved my NFL career, and now it is time to focus my time and energy on other things. The Tampa Bay Buccaneers then released a thank you video.
Grew up watching Tom. You're looking at the greatest right there. I think after your career's over, there's going to be so many times to reflect. It's been an amazing football journey.
Brady spent 20 of his 22 seasons with the New England Patriots. He does retire as the greatest of all time, even holding the record for most NFL records, including most completed passes. He won 7 Super Bowls. In Boston, Janet Wu, Bloomberg Radio.
Russian President Vladimir Putin is upset about what he calls the deception from the U.S. and its allies on the expansion of NATO. But in public comments today, Putin said he hopes that dialogue will continue. He also said he's hopeful that a diplomatic resolution could be found. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Keeping an eye on shares of Tesla. You might recall it was up about 11% in yesterday's session as
Just
we
a
saw.
normal day for Tesla, right? An 11% move.
Well, I mean, the last couple of days we've really seen a bounce back in the overall market trade, tech in particular. So Tesla was among them. It's down about 1% today, and we do have a story on the Bloomberg.
Yeah, Tesla's going to drop the self-driving feature that runs stop signs. It's disabling a feature of its so-called full self-driving, that's FSD system, that permitted its vehicles to slowly roll through intersections without coming to a complete halt when no other cars or pedestrians were present.
So can't you see the company meeting?
Hey, you're not allowed to do that, says the police officer.
Wait a minute. Can you see the company meeting? Guys, it shouldn't be rolling into the intersection. Maybe we should dismantle it. Okay,
Yeah,
I'm having fun, but it's like
totally
serious
makes sense.
stuff.
Right, it is. Here's how they did it, Cheryl. Tesla has released an over-the-air software fix after discussions with the U.S. National Highway Traffic Safety Administration. This is according to a recall notice filed online by the agency. The company's going to send letters to the owners. We should note that Tesla told NHTSA that no accidents have been reported.
Which is a great thing. The recall covering more than 53,000 2016-2022 Model S and Model X, 2017 to 2022 Model 3, and 2020 to 2022 Model Y
That's
vehicles.
not that many cars.
No, it's not too many. And what I always find fascinating, because cars are now a piece of technology.
Computers?
You just do a software upgrade.
Yeah, well, with Tesla for sure.
Well, but don't you even know, like in some, you take your car in and they do, like, they plug it in.
Yeah,
and
they
like,
plug it in and they're like, nothing's wrong with it.
Yeah.
That's $100 to plug it in.
I'm like, you just plugged it in.
I know.
Come on. Can't you play around with the carburetor or
I'm
something?
not joking. That's what they do.
Can't you change some oil?
Please.
It's a very different world. But this is part of our self-driving world, which obviously Tesla is very involved in, and there's tweaking as we go. I would argue the infrastructure still needs to be really beefed up in order for this to work really well.
We should note it's one of the reasons why it's not that many cars is because the recall reversed a feature that Tesla added in October for beta users of its driver assist system.
All right, this is a process. All right, you're listening to Bloomberg Business Week on this Tuesday, and this is Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Energy financials leading the way higher. The Dow, the S&P, NASDAQ at or near session highs as U.S. stocks add to the best three-day rally since 2020. Investors are bidding up companies that benefit from a strong economy. S&P up now by 27. That is a gain of 0.6%. The Dow up 254, up 0.7%. The NASDAQ Composite Index up 76, up 0.5. The NASDAQ 100 Index is pushing higher as well, up by 0.4%. Bitcoin up 0.7 now, 38,714. Spot gold up 0.2%, 17.99 the ounce. And crude West Texas Intermediate up 0.1%, 88.26 a barrel. Earnings news after the bell today. Be hearing from a number of well-known companies, including Alphabet, parent of Google, up 1.2%. Match down now by 1.3%. AMD up 1.7%. Starbucks reporting after the bell up 0.4. MicroStrategy up by 1.1%. This morning we did hear from UPS. UPS up now by 14.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. North Korean leader Kim Jong-un has ushered in 2022 with a barrage of missile launches, 11 so far. The country has also threatened to restart tests of long-range missiles that could reach the United States. It's understandable that U.S. President Joe Biden would want to downplay this issue, which bedeviled his predecessors and shows little promise of resolution. But ignoring the North Korean leader only gives him more time to improve his arsenal. The White House should be laying the groundwork now for a re-energized approach, working closely with allies in South Korea and Japan. With his missile tests, Kim is seeking to strengthen his leverage. The U.S. should do no less. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, counting you down to the closing bell, just about 10.5 minutes away from the close on this Tuesday. And we've got equities, as you heard from Charlie Pellet. We're pretty much at our highs of this session, wondering how much of it has to, with James Bullard of the St. Louis Fed coming out and talking about maybe we don't really need a 50 basis point. Maybe the Fed doesn't need to be so aggressive. Is that the reason
We're
why?
hearing a lot from Fed participants right now, aren't we?
They're talking.
They are.
Kind of managing us. Let's see what David Dietz has to say about that. He's managing principal and senior portfolio strategist at PPAC Private Wealth Management, $10 billion in assets under management. David with us once again on the phone from Summit, New Jersey. David, great to have you here. It's interesting that we've seen an uptick in stocks as we get nearer to the close. What would you attribute that to?
Well, so basically, I think a week ago Monday, we may have hit a, correction capitulation low. There was an awful lot of negative sentiment. There was a lot of flushing of positions. Since then, I think the market is getting more and more comfortable that they have some sense as to what the new Federal Reserve regime is going to be. We don't know all the details. We don't know all the timing, but I think stocks have begun to price in. Investors have begun to get more comfortable that we are on a rate hiking path, and that's now reflected in stock prices. Of course, we've gotten several very, very good earnings reports. The latest, of course, was from United Parcel Service. What could be a better barometer of the economy than one of the transportation leaders there?
Can I ask you? I am curious. It does feel like between Pat Harker of the Philly Fed and James Bullard of the St. Louis Fed, David, that it does feel like they're kind of ratcheting down some of the aggressive tone that a lot of investors were reading into the Fed's latest meeting. Is that maybe why stocks are going up today? Because it does feel like we were kind of bouncing around doing nothing, and then all of a sudden we saw a little bit of an uptick.
Certainly that's helpful. People were running around saying maybe 50 basis points is warranted in March. I even heard one calling for 75 basis points. So I think the market had priced in a bit of a frenzy that they didn't know, and were pricing in some of the worst case scenarios. And I think although the Federal Reserve's main focus is not the stock market, and of course we've seen pretty good stability in the bond market, I think there's some concern that's being reflected by these Federal Reserve speakers kind of talking the market down off the edge a little bit, saying, we're on a path, but we're not going to overdo it here. There's no reason to do that. We want to keep this economic growth on track.
Well, I'm wondering about inflation, because that's certainly, as you argue, the most important issue. Do you think inflation has peaked?
I think you can make a good case for that for a couple of reasons. One is we know things are getting better on the pandemic front. We don't know for sure, but the cases are waning and so forth. Why is that so important? Is because a lot of the supply bottlenecks, whether you're talking about people being reluctant to return to the workforce or ports actually being in a slowdown, are going to improve. That should help the supply side of the equation. And then, of course, just the mathematics, of course, as we start to lap some of the more stronger growth periods of last year, the percentage increases, I think, in prices will come off their peak that we saw in November and December of 7% year over year. And I think just seeing something that prices are still higher, but they're only up 4% or 5% year over year, I think that's going to help people breathe a sigh of relief.
This market cycle, where are we? You talked about the beginning, a correction capitulation. Do you think we've hit the bottom, or do we have to wait until that March meeting so we get a better, clearer indication of what the Fed is thinking? And maybe we have clearer, cleaner data points as we move further away from Omicron, fingers crossed.
Well, no one knows for sure, but I'd actually be arguing to look more at the inflation data points coming out, because if they start to cool or at least show some stability, we're less likely to get a nasty surprise in March. I think we're also going to be looking at some of these big tech earnings to get their outlooks. If they see stability in their businesses, they're such an important part, Amazon, Alphabet, et cetera, I think that's going to give people confidence. Remember, the Federal Reserve kind of follows the market. They don't lead the market. They're looking at the data points just like everyone else, and I think they'll be less aggressive if we see growth steady, inflation not worsen, and of course, we've recently seen a little bit of stability in the bond market. That's going to give them confidence not to overdo it.
How concerned are you about geopolitical tensions? Carol and I talked about it with our simulcast team at Bloomberg TV a little earlier in the day. How should investors be watching what's happening in Russia, Ukraine?
Well, certainly a flaring up of tensions and an actual invasion, that's not going to be good for the market, of course. That's going to bring down the market a couple points, who will lift defense stocks and, of course, energy stocks. But, I would argue, although we are long-term energy bulls, remember, energy did so well in January that I'm a little cautious here because, at the end of the day, I think Russia doesn't really want to have a war. They want to get strategic advantages over the West. So if, all of a sudden Biden and Putin have some sort of a virtual handshake, you could see energy prices fall dramatically here, because I think a lot of premium is built into that. We're never going to be able to get away from geopolitical tensions. Of course, North Korea also is looking for some sort of advantage too by launching these missiles and so forth. I think we're going to be able to live through that. But at the end of the day, I think whatever people are going to do this weekend, they're not going to not do it because of either North Korea or Russia.
Do you have a favorite part or segment of the equity markets right now, David?
We still like those cyclical names. I think, the United Parcel Services, they're going to benefit from a stronger economy. We like the banks. We do like the energy names. I would highlight financial and energy and two things. One, UBS over in Europe buying back $6 billion of stock. Exxon today saying they're restoring their stock buyback program. Contrast that with some of the growth areas where they're not thinking about doing that. They want to expand in the metaverse and all sorts of speculative areas. it may work out, but we like to, historically, the market has appreciated those companies that are buying back the shares and increasing earnings that way.
I point everybody to Mike Regan's cover story of Business Week, the big chill in the markets. We certainly saw that play out, but the CFO put the balance sheets, there's tons of cash, and that's allowing companies to do big deals a la Microsoft and Activision, or to do those buybacks. It's something we certainly have talked about.
New York Times and Wordle.
That's
right. Come on, deals just because they're between $1 million and $10 million. You know,
it gives them an opportunity to find growth.
Yeah.
David Dietz, thank you, over at PPAC Private Wealth Management, on the phone from Summit, New Jersey. $10 billion in assets under management. We're gonna potentially finish at our highs of the session, so up across the board on those major equity averages, up about 33 points on the S&P, 295 points higher on the Dow Jones Industrial Average, and up about 113 on the NASDAQ. Some big earnings, though, coming your way. It is time for our cross-platform coverage, Beyond the Bell, on TV, radio, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse movements throughout the day here. And Carol, right now, the movement is higher, at least in equity markets.
Yeah, it looks like, Romaine, that we're going to finish at our best levels of the day on the S&P, Dow, and the NASDAQ. I wonder why. Is it potentially some of those Fed officials, including James Bullard, telling Reuters that maybe it's not going to be so aggressive come the March meeting? We'll have to wait and see, Tim.
Yeah, a real rally in the last hour, finally giving the market some direction. It's actually shaping up to the best three-day rally in the S&P 500 since 2020.
I mean, a phenomenal 2 days that we saw. The fact that they're still managing to march higher, up 0.75%. And where, though, the love is being seen today, the fact that energy is back on tap, the fact that some of these earnings have been able to push these companies higher. UPS absolutely pushing it out of the park today. We'll see how the rest of the earnings come after the bell. All eyes on Starbucks, GM, as we're just saying, Alphabet.
Alphabet as well. Mandeep Singh, of course, sort of nailing what Gina Martin-Adams was telling us earlier on TV, that top line growth has been very strong, but of course the attention, Romaine, filters down through the bottom line, of course, passing on some of those costs and some of those margins that maybe have been under pressure.
Yeah, also waiting, of course, we're looking out for Electronic Arts and a few other names, PayPal as well. So we're going to get a pretty good, I think, cross read on various economic conditions out there, from tech, of course, to manufacturing to retail.
Yeah, and some volatility in those names in terms of gaining and losing ahead of those results. I do want to point out, though, the KBW Bank Index financials remain up about 2.4% today.
All right, getting the closing bells here in New York on this Tuesday afternoon. And it looks like it's going to be an update, a solid update. Third straight day of gains here. The Dow Jones Industrial Average going to finish higher by roughly 270 points, or 0.8%. The S&P 500 higher by about 0.7%, up about 30 points. The NASDAQ Composite up about 100 points, or 0.7%. And the Russell 2000, that's actually your outperformer here on the day, up about 1% here on the day. And just real quickly, Carol, I do want to point out that Dow Transports are higher by about 2%. That's largely on the back of the big moves we saw in UPS, up 14% on the day.
Yeah, real big kick to that average indeed. And the S&P 500, we're now up about 5% in the past 3 trading days, and overwhelmingly to the upside. 346 names in the index higher today, 159 lower, and as we await a big batch of earnings.
I mean, we've got to dig into what the earnings have been looking like, what the overall industry groups have been looking like as well, right, Taylor? Because this has been a day where actually the mood music changed more to the likes of energy. And we saw, what was it, Exxon doing particularly well there? Some of these companies managing to really show strength.
Tech, frankly, has been sort of unchanged for most of the day, Romaine, as we've been talking about energy. Even the financials actually now going positive for the year as well.
And we talk about the beats, and I think sometimes we kind of overplay, how many companies beat, but the expectations were pretty low. We've seen some pretty decent beats, not only in terms of EPS, but even on the revenue side. The question, I think, where the mixed bag comes in, as always, really tends to be that guidance. A lot of companies really, I think, taking a little bit more of a cautious stance. Some companies not even providing guidance. Others, they are sort of providing guidance, but basically saying, don't write this in stone. This is in pencil.
All right, I'm going to talk about Electronic Arts. They're just crossing, and you speak about guidance. They're coming out with fourth quarter adjusted revenue. Looks like they're pulling it in, $176 billion. The estimate on the street is $1.82. Adjusted revenues, fiscal year 7.53. They had seen 7.63. The estimate out there is 7.7 billion. And so, taking a quick check on this stock in the after hours, let me just bring it up here on my Bloomberg, and the stock's still up about 2.3%. But remember, this is a sector, Tim, in play.
I'm watching shares of Microsoft MicroStrategy as well. Remember, this is a Bitcoin play. The company missing on the
I thought
bottom
this was
line.
a software company.
Yeah, well, enterprise software company. Hey, they bought just in the last month 660 Bitcoin for around $25 million. So they have about 125,000 Bitcoin. Shares moved lower in after-hours trading, now unchanged though after that miss on the bottom line.
And of course, this is a company that, as they've been buying the 25 million, it's also how they show it on the balance sheet, the ways in which they account for it, and the ways in which the SEC wants them to account for it as well. So this is a company that continues to evolve. Remember, he's been holding, Michael Saylor over at MicroStrategy, been having this big conference. It's the first time we've heard from Jack Dorsey over at, well, now Block CEO, had been at Twitter CEO. First time he was talking about really sort of the trials and tribulations of trying to go into the world of crypto at that particular business.
Yeah, this is obviously going to be much more of a longer-term project. Of course, for our listeners, we are breaking down the earnings right now for EA and MicroStrategy. We are waiting for the big daddies of the day, including, of course, Alphabet, General Motors, and Starbucks, Taylor.
Yeah, really. And some of these concerns, again, as we talk about the top line growth here, again, we're still waiting earnings, of course, from Alphabet, and then the pressure. All of the research notes that I've read have been really talking about the brand loyalty as it comes to YouTube, really the standout of the cloud when you think of some of those big profitability businesses, Carol, as we still await those numbers.
Yeah, absolutely. Electronic Arts, let's go back to it because that stock is selling off in the after hours. It's down right now about 7.3%, and some of it has to do also with the third quarter miss of adjusted EPS of $3.20. That's 3 cents light. We talked about it also reining in its outlook, but again, this is a sector we're going to keep an eye on and ask about, with Microsoft buying Activision and Sony buying Bungie, like what's going on here?
Yeah, that is going to be the theme of the earnings call, right? Questions from analysts about consolidation in the space after some massive acquisitions that are being looked at, of course, by regulators, and not so massive ones like the New York Times actually getting into Wordle, which was tiny, but still some M&A in the space.
But this is still, at its heart, it's still a content company, and it's a company that's had some issues getting some of that content out the door. A lot of people waiting for that next iteration of Battlefield. It still hasn't really satisfied investors with the timetable for that. And you have to remember that no matter how strong these companies are in terms of brand reputation, you got to continue to refresh these games or get new games out there, or otherwise people move on.
Yeah, people do move on, and you've got to keep the high eye of the consumer right now, particularly as you're seeing those inflationary inputs that we saw in manufacturing. We've got some more breaking numbers.
Yeah, let's do it. Alphabet fourth quarter cloud revenue. You're seeing an operating loss of about $890 million. That's a little bit more versus an estimated loss of $820 million. We're going up to the services revenue as well, $69.4 billion. That does look like an improvement over estimates of $66.6 billion. The cloud revenue, of course, as we go to the top line there, does look like an improvement. So it's continuing that theme of strong top line revenue growth, even though maybe further down the income statement, things don't look as strong. That revenue, of course, within the cloud segment, $5.5 billion versus estimates of $5.4. Total other bets, Caroline, I know that's something that we've been looking at.
Yeah.
Also coming in light, $181 million versus estimates of $209.6 million.
All right, we're also getting General Motors earnings crossing the wire right now. Here's the number for the fourth quarter on an adjusted basis. EPS coming in at $1.35. The street was looking for $1.20. I'm going to give you the EBIT number only because GM is giving it as well. $2.84 billion. The street was looking for $2.46. And here's your forecast, Caroline. Looking forward here, GM is expecting 2022 net to be in the range of $9.4 billion to $10.8 billion. So it looks like it beat pretty much around here. Shares higher, only fractionally right now.
And let's check in on Starbucks as well, because real slowdown that we're seeing in China in particular, their like-for-like sales, they're down 14% versus the fall of 9% that the market expected. This is a company that's also seeing its earnings under pressure. 72 cents is where it comes out with first quarter adjusted earnings per share. The market wanted to see 80 cents. Remember, the cost of coffee has been going up significantly from a raw price point perspective. I'm looking at net revenue, though, coming in at a beat, $8.05 billion. The market had been looking for $7.96 billion. And overall, we're seeing international being the weak point. That's where the sales have been decreasing. But North America sales up 18% year on year in a like-for-like basis versus 17.5% that had been expected. So strength in the U.S., but not internationally.
Let's get back to the big guys. That is, of course, shares of Alphabet. I want to do this with Mandeep Singh, our senior technology analyst here for Bloomberg Intelligence. And, of course, we're hearing from the CEO, Sundar Pichai, coming out and really talking about growth in the advertising business, which is what I know that you were really focused on as well, trying to find new customers. They're talking about Pixel phones. And then, of course, the cloud business continuing to grow strongly.
Well, so the big beat in this print came from their core search business. So it wasn't from YouTube, as everyone was expecting. It came from core search. And the cloud business also did well. But when you look at the margin profile, they didn't beat by as much as they beat on the top line. So the top line beat was around 500 basis points above consensus. Margin beat wasn't as in the same magnitude. And part of the reason is they've been investing in all these new businesses, cloud, YouTube, and it's coming at the expense of, the core search business, which continues to do very well, as we see in the print.
And we're certainly seeing the stock move around in the after hours here. What is the key thing that you would be asking them on their call? Because there's certainly a lot of moving parts when it comes to Google.
Yeah, so YouTube, the fact that it was in line, slightly below, it begs the question, how much room there is when it comes to just the monetization, and is YouTube kind of negatively exposed to reopening? So what we have seen with, valuations is Snap, Pinterest, all kind of going down because everyone thinks with reopenings, these companies are negatively exposed. And looks like it's the same for YouTube. So the impact of the metaverse and reopenings on probably YouTube and core search is what everyone will be focused on.
It's really interesting when you dig into all these various numbers and the way in which that we're seeing revenue continue to be evolving in this business. They've been talking about NFTs as well. There is some talk as well as a declared 20-for-1 stock split. Mandy, was this something anticipated that we'd see Alphabet, due to the sheer size and scale and expense of their shares, to start to split them down so it's easily accessible for retail?
Well, we have seen that happen with Apple, right? So they've split their stock in the past. It doesn't surprise me, given, how kind of the stock has compounded over the years. And look, when you look at this company, 20% secular growth, it's compounding machine when you think about, the size of the company and the core search business doing that well. So I'm not surprised that, there is a stock split here.
Hey, Mandeep, we see shares of competitors, other advertising platforms based online rising in after hours as well. Watching shares of Snap in after hours, Meta platforms higher. Help us push this forward to later this week when we hear from other companies. What can we extrapolate from Alphabet's report today that helps us understand what these companies are going to tell us?
Yeah, so because the core search business did so well, it kind of puts into focus the whole performance advertising bucket. And, Meta is also performance advertising. So there are companies out there that are still investing in performance advertising to gain new customers, even though I feel the growth will probably decelerate. There was some pull forward during COVID, and I think what remains to be seen is, can it lift all the boats? And by that I mean Snapchat, Pinterest, Twitter. Can they all beat by how much Alphabet has beaten here?
Really appreciate your insight. Mandeep Singh, of course, senior technology analyst here for Bloomberg Intelligence. I'll remain as we look at other earnings as well.
Yeah, still keeping an eye on General Motors, beating on EPS, coming in at 135 versus 120, and the guidance going forward here looks like it's going to be 9.4 billion to 10.8 billion with regards to net revenue here. Shares higher here in after hours trading just by about 1.8%, according to my screen, though a little bit different there on your screen. Ed Ludlow joining us right now from San Francisco to help break it down what's happening. Ed, overall, the numbers look good. We didn't get a forecast or anything. It looks like we may have to wait on the conference call at 5 p.m. New York time to find out a little bit more about the company's longer-term outlook.
Yeah, I'm seeing shares bounce around in after hours, a little bit softer, 0.6%. Look, the fourth quarter story was well telegraphed, right? They missed on the top line, net sales coming in softer. The story there was semiconductors, a lack of, but they beat on the bottom line. Why? Because the consumer at the end of last year became accustomed to paying sticker price, higher prices, which boosted GM's bottom line. We actually do have some kind of guidance for this coming year. Full year 22, GM expects adjusted earnings before interest and taxes, adjusted EBIT of $13 to $15 billion. That's a strong outlook because it would beat the record set in 2021. And here's the key thing, Romain. An improving outlook for semiconductors in both the US and China as a big driver of strong results in 2022. But the market making its mind up.
Well, they're also having to mull over all of the billions of dollars, right, Ed, that this company's been investing. They put out their shareholder letter, and they say since 2020, we have announced investments totaling more than $14 billion in 10 sites across North America. It's all about upping that EV capacity, largely.
Yeah, and This is the difference between Tesla and Ford and General Motors, that they have to manage a transition from very profitable large pickup trucks and SUVs to a completely electric future. GM's EV volumes are very depressed right now because of the halt on production of the Chevy Bolt. We want to hear some more about that. I'm not seeing it on my screen. Reservations look good. More than 110,000 reservations have been placed for the Silverado EV pickup. That's not quite as strong as Ford and the Ford Lightning F-150, but they've had that product to market quicker, and it's been available for reservation for a longer period of time. So this is so competitive. Investors want the forward-looking, horizon-looking stuff. They just want the profit and financial stability in the near term too.
And talk to us, as they're touting, of course, is record earnings. This is a company that's having to weather an awful lot of increases, inflation inputs. How are they managing to weather that, not only on a supply chain basis, but also just a sheer, cost basis?
Yeah, I think that if there's one lesson of 2021, or at least the last 12 months, is that scale matters when you're dealing with supply chain bottlenecks, right? GM has a number of suppliers all over the world. Semiconductors has been a really dynamic spot because inventory levels have been really depressed. In other words, when an end user like an automaker receives a chip, it puts it straight into a finished good product. And they seem to have some command of that. But there's another way of looking at it, right? In the fourth quarter, GM lost its crown as top auto seller in US to Toyota. So you could say, well, hold on, if you were really impacted heavily by the semiconductors, and that's why this net sales figure missed that we got this afternoon, then perhaps their command of the supply chain isn't as strong, and Toyota were able to fail better, and that's why they pipped them to top spot.
And it'll be interesting to see just what kind of commitment they're making to this EV space. They did talk about deliveries of that GMC Hummer EV here and some of the reservations there, and the Cadillac Lyriq, the update here in that EV space going to start shipping in about 60 days. Bloomberg's Ed Ludlow helping us break down the earnings there on General Motors, and you definitely want to tune in tomorrow at around 9 a.m. The CEO of General Motors, Mary Barra, is going to be joining us.
Certainly will be. Meanwhile, let's dig into the earnings that come thick and fast right now. And just to repeat on Starbucks, look, they grew revenue some 19%. They increased their overall earnings per share some 18%, but it was lower than what the Wall Street wanted to see. Clearly, they're feeling the pressure. They're citing the cost prices that they're seeing, not only from a coffee perspective, but the Omicron variant, really meaning that they've got a tight labor market. Overall, same-store sales looking strong inside the United States, but outside in China looking weak.
All right, we've talked cars, we've talked coffee, let's talk dating, because Match Group is down in the after hours. That's because of a fourth quarter revenue miss. Keep in mind that in November, they revised downward their numbers, but nonetheless, fourth quarter revenue, $806 million. The estimate that was out there was $818 million. And again, that's a stock that's certainly taken a hit, as I mentioned, in the after hours, down about 6.3%. The APAC region, very important to this company, so we'll have to dig a little deeper to see what kind of exposure maybe hurt them there.
Maybe dating's over.
Or maybe people just took a break. Maybe people took a little break.
Zoom dating isn't quite the same thing.
Yeah, operating margins lower too there, Carol. 29% versus 33% year over year. So coming in just slight of Bloomberg estimates, revenue coming, total direct revenue coming in below estimates as well, Romain.
Yeah, we always keep an eye, of course, on some of the competitors. Bumble shares also lower here in the post-market, down about 4%. I do want to go back, if we just can real quickly here, to Starbucks, because you brought up the international unit and the drop that we saw there, which was much deeper than what the street was looking for. They're actually expecting a modest gain on international comp sales. And even the decline that we saw in China was much more severe. And it kind of makes you wonder what the overall strategy is right now for international expansion, an international expansion that was already being called into question prior to the pandemic.
Yeah, they say, although they said demand was strong, this pandemic has not been linear, and the macro environment remains dynamic as we experience higher than expected inflationary pressures, costs due to Omicron, and a tight labor market. But we'll see how they continue to expand in China and what Omicron really means for that.
We are, of course, hearing from Ruth Porat. We know her as the CFO of Alphabet, Google, and talking to some of our colleagues as well. And, well, when we talk about some of the inflationary concerns, the investments in the company, she says, in terms of the cash balance, we consistently manage it conservatively. We continue to invest aggressively in business. We look for additional investments, strategic investments to complement the business and that return to capital program. You could argue that return to capital program is indeed, Caroline, as you were talking about, about a stock split, a 20-for-1 is a sort of one-time special dividend, if you will.
Hey guys, just quickly, AMD crossing as well and rallying about 6% in the after hours. First quarter revenue, so a forecast 4.9 to 5.1 billion. That is way above what the street was expecting. They were looking for 4.33 billion. So that is certainly an outperformance, and they had outperformance as well. Fourth quarter adjusted EPS 92 cents versus 75 cents for the fourth quarter. Tim.
Yeah, so AMD shares up more than 5.5% in the after hours. What does it all mean tomorrow when it comes to tomorrow's trade? I'm also keeping an eye on shares of PayPal in after hours because they look like they are actually moving lower by about 2.6%. We're getting earnings on that company right now, pulling those up on my screen.
Fourth quarter total payment volume lower than expected,
Yeah.
339.5 billion. The estimate was for 343 billion remain. This is a company I know you keep a close eye on, but this is a payment space that their net revenue coming in actually slightly better than expected, but earnings per share ever so slightly light.
I think that payment volume is really clear. I mean, you talk about the adjusted EPS and the net revenue. That's pretty much in line with estimates, which of course can be kind of the kiss of death in this market. So we'll keep an eye on that, whether they can meet expectations with regards to some of the outlook going forward. But those shares are moving lower. Still keep an eye on a lot of other earnings crossing the wire as well. AMD out.
Yeah, I'm reading through the PayPal press release, of course, talking about the GAAP EPS of just 68 cents. You're looking at a comparison of $1.32 in the fourth quarter of 2020, 9.8 million net new active accounts, including about a 3.2 million from the acquisition of Brady that they also
remember that.
Can we just give AMD and Lisa Su a little bit of attention here for just 1 second? Because their earnings did come out, and I mean, this looks phenomenal, at least on the surface here. The 4Q revenue coming in at about 4.8 billion. The street was looking about 4.5, and EPS at 92 cents versus 75 cent estimates.
Thank you, Caroline. I'm from a large family. I often get forgotten. And
well done.
Oh, Carol's going to be mad at me tomorrow.
No, total love, total love. A lot of stocks moving in the after hours. Starbucks down almost 4%. We've got AMD up about 5%. We've got GM down about 1.2%. Google up about 6.5%.
What's AMD doing?
It was a beat.
I give up. I give
love
up.
to the New Jersey.
I got to run. They're telling me we got to run. All right, we'll see you guys all tomorrow. Catch our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. Same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Tim Stenovic and Carol Masser. And let's get right to Charlie Pellet for an update on this slew of earnings. Hey, Charlie Pellet.
Well, hello there. Let's recap, reset. Lots going on after the closing bell, the way we love it here at Bloomberg. Alphabet out with revenue for the fourth quarter that did beat the average analyst estimate. Also announcing that 20-for-1 stock split. Shares of Alphabet up 7% now after hours. GM's fourth quarter profit topped estimates down 1%. Starbucks out with earnings that missed Wall Street estimates after the coffee giant said costs rose due to the Omicron variant and a tight labor market. Starbucks down 3.8%. Just got AMD. Fourth quarter adjusted EPS beat estimates. Sees first quarter revenue in the range of 4.9 billion to 5.1 billion. Estimates 4.33 billion. AMD after hours up by 5%. A move higher for the Dow, the S&P, and NASDAQ. A lot of that buying coming in the final hour of trading today. Stocks adding to their best three-day rally since 2020. Investors were bidding up companies that benefit from a strong economy. 10-year yield, 1.78%. Spot gold up 0.3, 18.01 now the ounce. West Texas Intermediate crude up 0.2, 88.36 a barrel. S&P up 31, a gain of 0.7. The Dow up 273, up 0.8. NASDAQ up 106, up by 0.75%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, lots of stuff happening after the closing bell. Let's go back to Google, and we want to do a little bit more analysis. You've obviously been hearing our team coverage with our TV colleagues, but let's continue because shares of Google, they're up about 6.2% in the after hours. Earnings and revenue topping estimates. Company announcing a 20-for-1 stock split. A dividend. Ad business driving revenue. YouTube, though, falling short, and we are seeing, Tim, the cloud showing steady growth, still trailing than what we see over at Amazon Web Services.
Let's check in with Angelo Zeno, Senior Equity Analyst at CFRA Research. He joins us on the phone from Long Island. Angelo, you've had a few minutes to dig into Alphabet's fourth quarter earnings. Shares in the after hours higher by 6.2% right now. Carol went through some of the highlights. What sticks out to you?
Yeah, I mean, listen, I think all around this was a great quarter for them. And, kind of going into the quarter, I think there might have been some concerns about some of the supply constraints going on in the market and potentially hindering, some of the ad spend out there. But kind of look at the search business, and I think that's really kind of the big winner here, up 36%, and really kind of blew our numbers away. So I think that's really kind of the biggest takeaway here is that the spend from advertisers continue to do very well, and Alphabet didn't provide a 2022 guidance yet, but and we'll listen in when they do. But I think overall this is just a great start to the year for them.
Hey, Angela, I always think about names like a Google and what it means to the U.S. economy, to the U.S. market. If I look at, some of the major equity averages, it's about 3.8% of the NASDAQ 100, similarly to the NASDAQ, and about 2% of the S&P 500. What does Google as a company and an entity and its performance tell us more broadly about our economy, the global economy, and the financial market environment?
Well, it's interesting because when you think about Alphabet, right? I mean, they've got a lot of secular drivers associated with them in terms of kind of the shift from traditional ad spend to digital, and that continues to power the company, and we think will continue to allow them to grow at a double-digit pace. But at the same time, I mean, the ongoing kind of reopening of the economy and all that stuff is something that Alphabet will also continue to benefit from, as a lot of these enterprise companies continue to see improved profitability here over the next couple of quarters, whether it be the travel industry or among other areas. So, Alphabet's got more and more kind of mojo ahead of themselves here over the next kind of couple of quarters and years to come as well. And we're not even talking about the cloud side of things, where it's only 8% of their business, and they've only got kind of a mid-single-digit percentage market share, and a lot of catching up to do in terms of, relative to the Amazons and the Microsofts of the world, and where we think is going to, have a huge impact in terms of the top line growth contribution here for years to come.
Yeah, but it only narrowly beat Wall Street's estimates, and it's sort of this sign that we understand and investors understand that the growth in Google Cloud, it's robust and predictable, as our Nico Grant writes on our live blog, but it's not accelerating enough to overtake Amazon or Microsoft anytime soon. So it's kind of like this. Is it fair to call the cloud leaders a duopoly between Amazon and Microsoft, or is Google actually making its mark?
Yeah, I think that's a fair comment to make at the moment. I mean, you kind of look at Amazon's market share north of 30%, and Microsoft Azure or north of 20%, and it is kind of that duopoly, let's call it. And that being said, we do think there's going to be some aggressive spend on Alphabet's side of things, but it represents an opportunity there, and that's something they're going to definitely be focused on here, and we think could potentially drive upside over time. I mean, listen, from an OpEx perspective, I think it's going to be a headwind for them, at least well into 2022 and probably beyond, but nonetheless, an opportunity long term.
Hey, just got about 20 seconds left here. Got to be quick. Tech results so far. How does it feel?
I think it feels great. I mean, it should alleviate a lot of concerns from investors out there. Definitely beating nicely on the top as well as the bottom line. And with the recent multiple compression we've seen from a lot of these large cap names, I think the setup is great here over the next couple of quarters.
You did it. That's exactly where I wanted to go with that correction, whether or not they're interesting again. Angelo, thank you so much. Be well. Angelo Zeno, Senior Equity Analyst over at CFRA Research, on the phone in New York.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I have earnings lash.
I do too, and guess what?
There's a lot of earnings.
We got a few more to go. We got Amazon, we got Meta, we got Snap all later this week.
But investors are going to have a lot to play with in the Wednesday session. A lot of stocks, including AMD and Google, rallying big time. Alphabet, I should say, in the after hours. Not so good for Starbucks.
Not so good for Starbucks. Hey, let's get a check of what's actually happening in the after hours and some updates on those numbers. Here's Charlie Pellet.
Right, thank you very much. You mentioned Starbucks. It posted earnings that missed Wall Street estimates. Shares of Starbucks down right now by 5%. The big story after hours, Alphabet stock is surging 7%. Fourth quarter earnings beat estimates. It did declare a 20-for-1 stock split. Its ad business drove revenue while YouTube fell short. Angelo Zeno is a senior industry analyst at CFRA. He was our guest right here on Bloomberg Business Week.
The ongoing kind of reopening of the economy and all that stuff is something that Alphabet will also continue to benefit from as a lot of these enterprise companies continue to see improved profitability here over the next couple of quarters.
And after hours, shares up by roughly 7%. Stocks added to their best three-day rally since 2020. Investors were bidding up companies that benefit from a strong economy amid speculation the Federal Reserve will not derail growth as it fights inflation. David Dietz is senior portfolio strategy at PPAC Private Wealth Management. He was our guest on Bloomberg Business Week.
Although the Federal Reserve's main focus is not the stock market, and of course we've seen pretty good stability in the bond market, I think there's some concern that's being reflected by these Federal Reserve speakers kind of talking the market down off the edge a little bit, saying, we're on a path, but we're not going to overdo it here. There's no reason to do that. We want to keep this economic growth on track.
10-year yield 1.79%. Late day rally. S&P up 31, up 0.7%. The Dow advanced 273, up 0.8. Nasdaq up 106, a gain there of 0.8%. Spot gold up 0.3%, 18.01 the ounce. West Texas Intermediate crude 88.18 a barrel, up now by 1 cent. Little change there. One other report to pass along. GM's outlook disappointed. GM shares after hours down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I knew, though, that it was going to be kind of rough because they had come out, was it in December? So, but nonetheless, we're seeing the stock move. Let's shift gears, no pun intended there. Fashion industry, it's massive, covers so many different segments from luxury to secondhand, athleisure, subscription services, so much more. Tim, I came across one estimate, global fashion pegged at a $5.1 trillion market. It's got to leverage also to move the needle on so many things, whether it's climate change or diversity and inclusion.
Yeah, that's what we want to talk about with Dr. Joyce Brown, president of FIT, also known as the Fashion Institute of Technology. She joins us on the phone from New York City. Dr. Brown, how are you?
I'm fine, thank you. How are you?
We're doing well. There's a lot we want to get to. Carol mentioned the fact that fashion can move the needle, and we want to discuss the FIT's creation of the Social Justice Center. It's a higher education initiative that's established to help increase opportunity and accelerate social equity transformation for the BIPOC communities within fashion and creative industries. Let's start by just identifying the problem here. Give us some numbers about how big of an issue this has been.
Well, it's a tremendous issue when you think about the representation and diversification of leadership ranks in the creative industries. They're lifestyle industries. It's more than just fashion. It really does affect, every aspect from advertising, marketing, product development, fashion. So when you take a look at the composite and you really try and estimate what the representation is and how that impacts productivity and product development, there's a long road ahead that really where a lot of improvements can be put into place. And we think that the Social Justice Center will help us do that.
Dr. Brown, help me out here. I think there is a perception or belief, whether it's Silicon Valley where a lot of innovation disruption happens, or whether it's anything to do with the arts, fashion included, right? That it would be more inclusive and diverse from the get-go. And yet it hasn't been. How come?
Well, look, fashion, like everything else, is a business. And I always say creativity and talent is equally distributed in society, but opportunity isn't. So how do you get to be the one that is recognized? How do you get to be a brand? That really does require an infusion of money, of trust, of networking, of contacts. So, I think everyone is struggling for the same kind of recognition, and it's not every door is open and every opportunity is available. So, there are many, many talented people who are, creatives and makers of fashion and other elements of design, and they don't get the recognition.
Well, what about when it comes to the big companies that recruit from FIT and how you've been able to really get them to support the Social Justice Center, companies like Prada, Saks, Ralph Lauren, Target, and more? What are you hearing from them about what they want to see in terms of the next generation of leaders?
I've really been encouraged by the enthusiasm and goodwill that these companies have demonstrated. They've put their money in. They've said they've appointed people within their companies to be leaders in this area, and we're most appreciative of that. But at the end of the day, it's really good business. When you look at what the impact is in terms of the buying power and the economic impact of people of color in these creative industries, I think it was estimated in 2020 that the Black community had an impact of $1.6 trillion. So, if we're honest and we look around at what's happening to the demographics in our society, it would be quite foolish not to pay attention to a growing and diversified market. And so I think it's twofold. I mean, I think it's a partnership that benefits all that are engaging in it. And I think that's what we're seeing with the companies, and we're very grateful and appreciative and think they're going to make a tremendous difference by supporting scholarships, being open to the whole notion of internships for talented young people, for mentoring for the employees that they currently have in their businesses.
Right.
And, I think there's a win in it at some element for everyone that's engaged in it.
Dr. Joyce Brown, we're going to come back with you, continue our conversation. She is president of FIT, the Fashion Institute of Technology, with us on the phone from New York City. In the meantime, let's get an update on world and national news. A lot going on this Tuesday. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. Russian President Vladimir Putin says the U.S. and its allies have ignored his top security demands, but he does add Moscow is still open for more talks. Meanwhile, senators of both parties are putting the finishing touches on a bill that would impose harsh economic sanctions against Russia should Vladimir Putin send his troops into Ukraine. Bloomberg's Irv Chapman reports.
U.S. diplomacy has kept Allied pressure on Russia while reminding Putin there's a way out as well as punishment in store. Chairman Mark Warner of the Senate Intelligence Committee suggested in a Bloomberg interview.
Putin, who frankly does not get a lot of outside input, I think believed that if Russia went in, the West would not do much, and frankly that the Ukrainians might even greet the Russians as liberators. He's been disabused of both the West's stance and the pushback from the Ukrainians themselves. I hope is giving him pause.
Warner reminded business leaders that cyber warfare is a continuing threat and advised that they waste no time hardening their company's defenses. In Washington, Irv Chapman, Bloomberg Radio.
Senator Joe Manchin says President Biden's vast Build Back Better bill is dead. The pivotal West Virginia Democrat says any revival of Democrats' top domestic priorities will have to come out of fresh negotiations. After days of speculation, Tom Brady has made it official, announcing on Instagram he will retire after a standout 22-year career in the NFL. Boston Globe sports columnist Dan Shaughnessy spoke with Bloomberg Radio.
The guy got to 10 Super Bowls and won 7 of them.
He won one when he was 43 years old. He played really at MVP level at the age of 44 this year.
Dan Shaughnessy says the Brady era will not likely be duplicated. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So we know it was going to be an earnings deluge, and that's exactly what we got after the closing bell. And Tim, one of the names that we're watching that's really selling off big times in the after hours is PayPal.
Yeah, PayPal shares are just getting crushed in the after hours, Carol, down about 14% right now. They were higher going into today. The company saw 2022 adjusted EPS between $4.60 to $4.75. That was a big miss there on 2022 adjusted EPS. The street wanted to see $5.23. Fourth quarter total payment volume also came in below estimates, $339.5 billion versus estimates of $343.47 billion. Again, shares down 14% in after hours.
That total payment volume, as you mentioned, smallest increase in 2 years. It was up 23%. Smallest increase in 2 years fell short of analyst expectations as its former parent company, eBay, continues to move its payments offerings away from PayPal. What's important about this company, and not that it's apples to apples, but you just juxtapose it against what we saw from Visa and MasterCard about spending. We saw incredible volume on their platforms. Yeah. And so you, to some extent, expect to see the same on something like a PayPal.
Yeah, we talked to Julie Sheriel of Bloomberg Intelligence on Quick Take Stock earlier today, and she said keep an eye out for any indication that PayPal is actually succeeding in becoming the super app, right? This app that is the one place for all of your financial needs. It's got a long way to go, and there's a lot of competition there, too.
There's tons. I just want to point out, we're watching Google, too, in the after hours. It's up about 7.4%. Certainly some optimism there from earnings. Company declaring a 20-for-1 stock split. You don't see that every day. And coming out with a bunch of numbers. Fourth quarter revenue ex-tax, $61.9 billion. That was a beat. $59.37 was the estimate. And then you had GM also out with their earnings, and you saw some pressure on that stock in the after hours. Just right now, unchanged, though.
Hey, we're seeing Alphabet's impact on the S&P 500 and NASDAQ 100 mini futures for March of 2022. NASDAQ 100 up 1.47%.
Starbucks also out in the after hours, and that stock is down about 4.5%. Disappointment over those results. You're listening to Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters. I'm Charlie Peloton. A day when stocks rallied, plenty of after-the-bell earnings news. Let's go there with Google parent Alphabet. It posted fourth quarter sales and profit that topped analyst projections, showing the resilience of its ad business in the face of major economic upheaval as the pandemic persists. Shares soaring in late trading. Google Alphabet up now by 7.4%. Also reporting after the bell, General Motors, it's seeing signs of an easing in the semiconductor shortage that curbed vehicle output and dented its market share last year, but it's cautioning sales and profit for 2022, maybe a little change. GM after hours down now by just about 0.4%. Stocks had their best three-day rally since 2020 as investors bid up companies that benefit from a strong economy. Amid speculation, the Fed will not derail growth as it fights inflation. S&P rallied into the close, up 31 points today, up 0.7%. The Dow up 273, up 0.8. NASDAQ up 106, a gain there of 0.7%. 10-year down 4/32, 10-year yield 1.79%. Gold up 0.2, 18.01 the ounce. West Texas Intermediate crude oil up 0.2%, 88.34 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest, Dr. Joyce Brown, still with us, president of FIT, the Fashion Institute of Technology, still with us on the phone in New York City. Dr. Brown, we have had guests on here that talk about the fashion industry and the impact certainly on the climate and the environment. You've probably seen the book about what it takes to make a pair of jeans and the amount of water that's used. What are the conversations that the fashion industry are having when it comes to not only setting goals, but really making sure that they attain them?
There's a tremendous commitment. You know, over time, there's been a lot of conversation about sustainability and about the excesses of the fashion industry and the impact on the planet. And at one time, it was looked at as if it was a business expense. And it certainly does increase the cost of doing business. But at this point, the consumers have raised the consciousness so considerably about the importance of the practices of companies that it is really now just part of the cost of doing business. And there's lots of progress being made where companies are investing in waterless kinds of practices, where here at the college we have students who are very involved in what they call biodesign, and they are making textiles out of natural ingredients like pineapple and kombucha and mycelium and various things that they do in the laboratories that have strength and resilience, and that companies are adopting in their production. So it's very real and it's very important. And you know, when you deal with an educated consumer, you really do have to respond. I think it's very similar to what's happening with the requirement of a diversified leadership and employee ranks. People are knowing what they want to see and how they want to judge the companies where they invest their funds.
Hey, Dr. Brown, whenever we talk to an educator, whenever we talk to anyone, I should say, we ask about what things were like during the pandemic, what they've been like during the pandemic. But I wonder specifically for you, and particularly for you, the Fashion Institute of Technology, right? This is an industry that requires lots of hands-on and in-person experiences. How have you dealt with the pandemic, and where are you right now in terms of education? Are students there? Are they getting to be around each other?
Well, it's interesting you ask, because yesterday was the first day of our spring semester, and yes, we are we opened in person. We actually delayed the opening until yesterday. We had come back for the fall semester, and of course had to go back to remote right at the end when Omicron was really surging in the city. But what I would say is that we're nothing if not resilient, and students particularly so. The faculty, we made big investments in technology that allowed faculty to go remote. You know, we have done strategic planning looking at what the future, what the response of education should be to future changes, and we thought we had anticipated what would happen in another 10 years, and it all happened in March of 2020, and we were there in the deep end of the pool trying to figure out how we were going to stay afloat and educate the students who had come to us for that. And we did pretty well. I think it was difficult for our art and design students. The business students did a little better, but the art and design students need that tactile, in-person, you know, draping and touching and of course, learning the software and the new advances of technology that really do so infiltrate and infuse fashion today. But all in all, we did not lose that, you know, many students. We have, you know, there are colleges all over this country that are, you know, bemoaning the loss of their student body. Yeah. We did not lose that much. The students are there's a muse sitting on their shoulder, and they need to answer it, and they've come back, and they're very anxious to be together in the studios with their faculty. And, you know, I'm quite hopeful that we will have a good spring semester, and, you know, they will be able to deliver on the promise that their talent creates. Although, you know, it's also interesting when you look at their artwork, you know, the pandemic is very much reflected in what that experience was like.
I bet it's coming out, right, in their innovations and designs. We're going to leave it there. Dr. Joyce Brown, thank you so much. Really appreciate it. President of FIT on the phone in New York City. We do want to just remind you of some of the big earnings that came out after the closing bell. Among them, Google, earnings and revenue topping estimates, company announcing a 20-for-1 stock split, a dividend, ad business really driving revenue for the company. YouTube, though, falling short of expectations, and the cloud showing steady growth, which is an important growing metric increasingly for Alphabet, but still lagging behind what we're seeing from AWS, Amazon Web Services. That stock, by the way, in terms of the after-hours trade, Tim, it's up about 7.5%.
Yeah, it's also making things look pretty good on the NASDAQ 100 for tomorrow, as well as the S&P 500, given its market cap. As you mentioned, Carol, the company's just been on a tear over the last few years, up double-digit percentage points, beating out the S&P 500 over the last few years.
Let's mention a few of the others. General Motors, it's down about 1.2%. Their outlook disappointing, so shares are under pressure here in the after hours. Fourth quarter adjusted EPS, though, did top estimates. As for the 2022 adjusted EBIT in range of 13 to 15 billion. And we're going to be hearing from CEO Mary Barra tomorrow on our air, so we'll look for some more news about that. PayPal, though, big time down in the after hours. Tim, it's down about 16%.
Yeah, PayPal's lower by 16%. The company reported earnings that missed analyst expectations. Also, the company gave a forecast for 2022 adjusted EPS that fell short of estimates. It's getting crushed in after hours, down about 12%. Starbucks, Carol, also down, posting earnings that missed Wall Street estimates. The company said its costs rose due to the Omicron variant and a tight labor market, shares falling in late trading.
And I just want to mention another one to the upside. AMD up 9.6% in the after hours. This is one of the big players in the semiconductor space. First quarter revenue, 4.9 to 5.1 billion. That's far above what the street was expecting. They're looking for 4.33 billion. So an upbeat outlook, and that forecast really giving some kick to the shares. In the meantime, something coming up next.
Oh, yeah, we got Sound On coming up next. Joe Matthews in here with a little preview. Joe, what's coming up?
Well, other than the fact I guess everyone was right about PayPal, I can't believe what I just heard from you. Jared Bernstein, one of the president's nearest economic advisors, will join us. You guys ready for this Jobs Report Friday?
Yeah.
It may not make a lot of sense.
They're talking it down already.
All 5 days in advance, yes. We'll see what he has to say about it.
Managing us big time. All right, Joe Matthews with Sound On. Have a great evening, everyone.